Mining companies have announced billion-dollar write-downs, mine closures, and thousands of job cuts. But that's the continuing prices in metals continue on the downside, and this still remains a sector or an industry that is currently in reverse. Well, in the latest issue of Finweek, we took a deeper look at the state of the mining sector. But joining us in the studio to discuss the story for this week is Finweek Finweek editor. The contributor was Mushima. That is Jana Marais. Thank you so much for your time, Jana. So the mining sector, it's been all over the news over the past couple of months or so. But let's recap the main factors here that are putting pressure.
Yes, I think it's very much a China story to a large extent, and I think we'll dig into the big issues in a bit later when we have some experts joining us as well. But I think the demand has been subdued, and then of course, you know, companies have been ramping up supply massively, so prices have been under pressure. And I think we had Mark Tufani say, you know, they didn't expect it to go on this long this year. So I think they have been caught. You know, there has been cost cuts, there has been job cuts, supply has been taken out of the market, but clearly not enough. So it doesn't seem like there's light at the end of the tunnel just yet.
Just picking up on that statement by Mark Kutifani saying, you know, labour or the laws governing labour need to be a lot more flexible. So speaking about labour, we've got the gold wage negotiations and offers being put down. How's this likely to play out?
Look, it's always an interesting time of the year, I think, and the standard response from unions yesterday to the Chamber's final offer was obviously that they're extremely disappointed. I don't think you'll ever get unions jumping up and down with joy when an offer is made, so there's no surprise there. But I do think, you know, there's a few things we need to keep in mind. The gold industry is really struggling. South Africa, I saw a stat today, 40,000 jobs cut since 2010, between 2010 and 2014 in the industry. So, and there's now about 130,000 people left working in that sector, so it's still massively important. About 33 years life of mine left in the South African industry. So the unions will have to balance, you know, job security versus big pay rises. But I do think we'll see a strike. I think the question will be how long and how damaging it will be.
And I think one thing that we also need to think about is the secondary economies or the secondary sectors from the mining sector that will also be impacted. We saw AECI as one, the likes of your Caterpillars that are exposed to the mining sector, for example, as one of the beneficiaries or on the bad side of this mining strikes or commodity price falls.
Yeah, absolutely. I think the big suppliers, I mean, those are the obvious ones, but I think one of the things we've seen very clearly last year with the platinum strike in Rustenburg is the knock-on effects of these things. It's not only the big suppliers, but also small businesses, and not only in mining towns, but in labour-sending areas. It has a massive knock-on effect, given the number of people mine workers typically support. And also, I think the job link, it's about one indirect job in a related sector to one direct job. So it's still a massively important sector of the economy. So